In this discussion, we will discuss the discussion question of describe an investment center and how it can be evaluated. When we see an essay question like this or a discussion question like this, our goal typically is to expand on the answer to these types of questions in order to pick up the most points. With an essay question, typically we'll get points if we add the information that they're looking for, and if we add more information, we're more likely to do so. And we're usually not going to be taking away points if we add too much information. Therefore, more is better than less, oftentimes, if we have the time to do so. Discussion questions, of course, our goal is to expand on the discussion, and therefore finding ways to expand and contribute to a discussion is our goal. Question once again, describe an investment center and how it can be evaluated. We could first take a step back and say, well, an investment center is part of managerial accounting as opposed to financial accounting. And we could go into the differences between managerial accounting and financial accounting. Managerial accounting being the internal decision makers for management as opposed to external decision makers. And when we think about internal decisions, we're typically breaking the company up and looking into segments in order to improve the operations, as opposed to financial accounting, which is typically looking at the big picture to look at investment for external users or other external uses for the financial statements. Then we could go into the investment centers. How would we then apply this principle for managerial accounting, breaking it up into components? One way is that we can break them up into centers, and then we can evaluate these different centers. Why would we do that? Because if we break things up into centers, that's one way that we can kind of segment our company in like items and then be able to measure those items or find measurement tools with which to use to measure those investment centers and the other types of centers that we put together. When we see investment center, we want to basically define it typically by contrasting it with other types of centers. The three types of centers that we would probably want to list out: investment center. The two main ones that we usually think of is going to be a profit center and a cost center. One has to do with the profit and has costs related to it. The other is going to have just costs with it. And then we have the investment center, which is not usually the one that we think about most as like normal operating activities, because the investment center will often be responsible for managing the asset investment, longer term investments, and therefore they're managing the asset, the longer term investment, which may not be like the normal day-to-day type of operational things that are generating revenue within the company. So the profit center, of course, is going to be where we're actually getting the sales coming in. And any center is going to have costs related to it. It will then be measured both on its revenue and its costs, mainly on the difference between the two, the revenue over the costs. And the same is going to be true with the investment center, in that it will typically have some type of income and costs, and we'll be measuring income and costs. However, the investments are there, and we might want a longer type of return on the investment. So we're not just looking for short-term returns as we might be typically for a normal sales center or profit center. And in an investment center, it might be good decision making to forego for short-term profits for longer-term profits that are greater. And therefore, we need different evaluation tools. We need to say this isn't a profit center, it's an investment center, and therefore we're going to use different tools to measure it. Things like return on investment would be a type of tool that we might use to measure an investment center. The other center, of course, is a cost center, and it manages only costs. So it doesn't have any revenue. It's important to the business to have the cost centers to help support the revenue generation centers. However, we can't measure a cost center based on how much revenue they generate, of course. We have to measure them using different tools as well.